Ben ritrovati giovedì mattina su Florida New York Stock Exchange, in questo momento indici tutti al ribasso, giornata ancora comunque caratterizzata da volumi di scambio piuttosto sottili, ma ne parliamo con il mio ospite qui sul floor, come vedete è Kenneth Polcari, che è direttore delle operazioni sul floor per O'Neil Securities. Kenny, welcome back.
Thank you very much. Welcome back to you.
Very nice outfit today.
Well, do you like it? I went right across the street. Joseph Banks and I bought it.
Now let's explain why you're wearing this.
Well, because it is National Relaxation Day, so here at the exchange, they decided they were going to participate in this, and so they kind of pulled the rules back today and they said everybody come to work a little bit relaxed, ready to go, but a little bit relaxed. And so actually it works for me.
Works for everybody, and in Europe and in Italy today is a holiday,
It's a
so
holiday
it's
anyway.
absolutely perfect timing. Now let's go back to the market. Today we are down again. Important technical level has been pierced. Is the market on vacation? Are you worried about this?
I think it's both. I do think the market's on vacation, both on the way up and on the way down. It's the last 2 weeks of August. Not only are people on vacation in this country, but people are really on vacation kind of around the world, right? A lot of Europe is on vacation. So therefore, volumes tend to be muted, tend to be less. But the fact is that, we've been talking about market reaction in the event of a Fed tapering. And so I think ultimately what's happening is that the market is preparing itself. It's not collapsing. There's no panic, but the market's just preparing itself for the eventuality of a Fed tapering. And so this way, if in fact it happens in September, and I still don't think it's going to, but if it does, the market will have already sold off, 2 or 3%, and so then maybe the reaction will be one not so drastic, right? Maybe it will still sell off a little bit, but it won't feel so drastic, right? Because it will already have prepared itself. So I think honestly, it's probably the right thing, but I also think that's one of the goals of the Fed. They were trying to talk it down just so you wouldn't have this panic kind of reaction if in fact they announce it.
Also yesterday, Bill Gross calculated in a percentage of a probability of 80% of tapering in September. Maybe also he's doing the same thing, trying to prepare in the market for it.
Right, and I think that's right. I think what's confusing though, and this is why the market, is you don't see a real bet either way, is because there are some people that clearly think it's going to happen, but then you get different Fed presidents that come out and say, yesterday Bullard came out, and he's a voting member, and he said the data still isn't there yet for us to be clear, for us to make a decision and say that it's going to happen. And so, the message is still a little bit confusing, which is another thing the market doesn't like. The market doesn't like confusion. It likes clarity. Whether the clarity is we're cutting or not, the fact is the market likes to know one way or the other.
And the economic data today are not helping. I mean, they are confirming that we are getting different signals.
That's right, and that's been the story over the last 6 months. Is that you get a couple of days of economic reports that are very positive, and then it's like one step forward and 2 steps back, right? And so the data today, in fact, continues to show some weakness, right? And so once again, it throws kind of confusion in the air as what's the Fed's going to do. And so, quite honestly, I think what happens is we broke at some technical levels in the market. 1680 was the first one. We broke that pre-market. 1670 is really a key level. Don't forget, that was resistance on the way up, and then it became support on the way down. I think there are plenty of buyers. I think they're at 1670 and lower, but I think what's happening is that there's no reason for the buyers to stand here and hold it in place. If they wanted to make a stand, they would, but the fact is they're saying, let me test it. We've now broken the level. Let's see if it creates some technical selling, and they're going to take advantage of that, which is exactly what they're doing.
It's not easy in this environment. We were saying the volumes are so low, so that's why probably they struggle.
Right. It is a little bit of a struggle. And the other thing is there's not a lot of volatility, right? Like yesterday we saw it too. The market just kind of sold down. It wasn't doing this, right? So in fact, it's confirming to me that the market's trying to reprice itself. That it's not so much about a trading market. It's about the market trying to find a new level.
Now let's talk about in particular in one sector, the retailers. We have been talking about this for the last couple of days because we got very worrying signals from 2 big companies of the sector. Macy's yesterday, Walmart today. Right. Especially because they are concerned about the level of sales, not only this last quarter, but until the end of the year. Right.
And what's interesting both about Macy's and Walmart is think about the demographic that goes and shops at Macy's and Walmart, right? Macy's is very middle income, middle class shopping, right? It's not high end, but it's not the dollar store either, right? But it is where the bulk of the country is. And if Macy's, which is really, the largest department store in this country, if Macy's is showing concern, then I think people have to start to pay attention to that message, because that is a message telling you about the health and the strength of the consumer. And it runs counter to some of the reports that you're getting from different government agencies about the health of the consumer. But the fact is, if you live in this country and you go and you talk to your neighbors and you talk to your spouse, you realize that it is still very much a struggle for a lot of people.
And Walmart is on the same level, is very worrisome because it's low-income families.
Walmart even more so. It caters to bulk buying and the lower income, and so therefore that's also of concern, because all that really says is that energy costs and food costs are taking a bigger chunk out of everybody's budget, but at the lower end the percentage is bigger, and so therefore there's less discretionary income, and so that's something that we should all be worried about. But you see, that's exactly what the market's doing. The market is now understanding that, I think, and it's taking some of the froth out. Because don't forget, we're still up 17% year to date, so we haven't had a bad performance, right? Even Macy's was up 34% before the sell-off yesterday. So that's been a great performer. And so what some asset managers are doing is they're saying, yeah, listen, let me take some money off the table. This wasn't a great report. The stock has done very well this year. Let me take some money off the table in preparation for what might be coming down the line. And so that's exactly what you see happening.
So now let's talk about next week. It's going to be the last week of August. We can not expect, a lot of things happening. Do you think that we're going to churn here, or we can even go lower than this?
I think next week, don't forget, we're getting that much closer to Jackson Hole. So the Jackson Hole, is that big global conference. You got all these central bankers coming, and there'll be some indication of not only what we're thinking, but what other central bankers are thinking. It's also going to be an indication of who in this country kind of takes the lead, right? Who's gonna rise to the top in terms of the next Fed chairman? Because we know that Ben Bernanke is going to be out in January, and so it's going to be interesting to see the interplay between the participants to see who, right? So people are going to be watching that. But overall, I think what's going to happen is the market's going to continue to churn. I think the path of least resistance is lower at the moment. There's no reason for people to come running after them, because the data is not telling you that, and people are concerned. And we're coming into September, which is typically kind of a volatile, weaker month. We've got fiscal issues in this country to worry about. Congress will be back from vacation. The debt ceiling debate, all that stuff is going to add kind of to the policy discussion, right? And so therefore the market typically runs into a little bit of difficulty in September going into October. So I fully suspect it's going to happen again.
It's better prepare for that. Thank you very much, Kenny, for being with us.
Thank you for having me.
E grazie a voi per l'attenzione e a domani.